Well, I think that the low growth, low interest rate scenario will remain for at least the next 24 months. I think that it will, lead to a situation where you still have, very low leads in the real estate market. I think that residential right now in Germany, for example, will remain at these kind of low levels. I don't see much room for even more yield compression right now. But now it's up to, going along the food chain, the value chain, looking for value add or not like core markets. So we will see a trend in value add investments, I think. I think we will also see a trend in secondary markets. I think the numbers Stephan has shown before shows that the kind of secondary markets, like even Portugal or CEE, will see some stronger demand in these areas. And overall, at the end of the day, I think that the low interest rate environment will remain because of macroeconomic reasons. But at the end of the day, it will also lead to the fact that investors right now are full of cash and they just need to invest. And that, I think, is a different scenario that we have back in 2007 or 8, where a lot of the growth and the demand was driven by the debt markets. So I think it's a much healthier environment. So that was one of the reasons why I didn't want to join the party just when the party is getting to close. So that's why I invested this year. So I think it will remain. However, what we see, and Deutsche Real Estate Fund, for example, was the first company which issued a student housing bond this year, so asset-backed security. And what I hear right now from the capital market side is that this market will come back. And I think that this will also increase liquidity over the next time. And I'm talking to a couple of investment bankers where a lot of CMBS structures are coming back into the market, and demand is huge right now, especially in light of the fact that there's Solvency II coming in next year. So a lot of insurance and pension fund companies right now are desperate for yield. So they are even willing to take higher risk right now. So I see that could be a potential driver in the market on top of where we are right now in the core markets. At the same time, it will also increase the risk in the overall market, I think.